But the valuation of this market's been a concern for a lot of people, but your word of the day is undervalued. What's undervalued right now?
Frank, I think Oracle surging 41% after they report earnings tells me that AI is an undervalued sector, because how else do you explain a stock that is as large as Oracle gaining as much as it is unless it shows investors are really underestimating the future growth of AI?
Just to be clear, what's undervalued? Are we talking about the chip sector? Are we talking about software? Are we talking about the hyperscalers? Are we talking about the Mag 7? Or is it everything in your mind?
Well, I wouldn't want to be too specific because, AI is still a 5 or 10 year story. And so I wouldn't want to be trying to drill this down into a really narrow set. I think AI as a theme is continually underestimated because I think a lot of people think this is money being spent without return. Oracle is showing you that there's a lot of future growth.
Is there going to become a moment at which the market is not going to reward people for spending?
Well, I think we're pretty far from that moment. I think it's a fair point, but that will come as the sector begins to become, fully mature. And I think that we're still 5 to 10 years away from kind of, full scale commercialization, right? We have to hear about the S&P 500 monetizing from AI and how AI is actually helping their top and bottom lines in the next earnings calls for the next 5 or so years. So I think that money will continue to be there. A lot of the investments from the hyperscalers and from some of the MAGA 7 companies are very much going into AI. We saw that this last earnings season. And so I think they will fund what is needed to build out this infrastructure. And I think that trade still exists. So to your point, eventually it could top out, but I don't think we're anywhere near there.
We do like NVIDIA first, Microsoft, and then TSM. Those are our 3 picks that our models favor the most. And I think if you think about that reality, NVIDIA continues to have this demand that we've talked about. There will continue to be this data center build out. TSM also benefits from that. And then obviously the Microsoft pieces, they're still the leaders, in my opinion, in the AI data infrastructure side.
Pull out NVIDIA, please. They're going to make an announcement during Trump's visit to the UK. All right. What's that about?
I'm calling this technological diplomacy. So NVIDIA and OpenAI, we keep talking about OpenAI. They're reportedly announcing a multi-billion-dollar investment deal in the UK's with the CEOs of both companies reportedly accompanying President Trump on part of his state visit to the UK next week. You'll be there. The tech giants will reportedly be teaming up with a British data center operator on this project. Look, this is huge because the UK wants a greater role in the AI race. And if you have 2 American companies invested in your companies, wouldn't they have more political visibility as Europe cracks down on AI with tough regulations?
That's a fair point, yeah. We're going to do the show from London Wednesday and Thursday.
I think you're going to see a lot of fancy people.
Fancy people?
Well, people, yes, fancy people. Royalty, tech CEOs, the President of the United States.
We'll see.
I'll just be here.
Oh,
exactly.
Baidu and Alibaba. Oh, wait a minute. They're using their own chips for AI? What?
It's a race between nations for artificial intelligence. The information is reporting that Baidu and Alibaba are using their own chips to train their AI models. What was the news yesterday? Alibaba, a major e-commerce player in China, was issuing convertible bonds to help fund its AI plans. You need deep pockets and energy for AI. And now reportedly, these 2 Chinese names are going it solo.
Okay.
I try to keep it simple, which is at any given moment, there's going to be something that comes off the pace. NVIDIA had 4 down weeks in a row before this week. Google broke out last week to all-time highs. Broadcom broke out to all-time highs. This week, of course, the Oracle story. And so this has been a story, a couple things to say about tech this week. One was Oracle, which for a company of that size, of that maturity, they went public in 1986. To tack on $250 billion of market cap in a day is a statement. I think that is a statement that the AI infrastructure story is still alive and well. We had our marquee tech conference, our Communicopia conference.
Yes, you did.
What stood out to me was you had some of the largest companies in the world get on stage and attach revenue to AI. That's what the market's looking for. Google, Broadcom, of course, Meta, got up and could make that attachment point. I think that's what would continue to power the market.
So when Oracle gives the kind of guide that they did, which was, astounding, leaving like analysts' mouths agape when they hear those numbers, that doesn't give you any level of pause to say, well, it all better materialize or what was a $100 billion gain for Larry Ellison's net worth might not be as much down the road. How do you address that?
For sure, it's in the doing, because now these bars
Right.
are set high. So I acknowledge that. Scott, I'm definitely not smart enough to know where the AI story ends as it relates to returns and efficacy, utility, all of that. I don't know. What I would say is I hope I'm smart enough not to step in the way of the revenue freight train right now. And I think every large company, as it relates to AI, but all things tech spend, are continuing to stay on the gas.
So you feel as though, because as you articulate your views as positive as you are we early innings still in this whole AI run and how it's going to impact the economy and the market?
I don't know is the honest answer. On any given Sunday, someone will say to me, hey, Tony, this is second inning. And someone else will say, this is the biggest misallocation of capital since Global Crossing.
Well, you don't think this is the eighth inning. I mean, obviously.
I do not. My guess is this is the middle innings. It's not just an AI story, of course. Again, it's the broad cyclical impulse to spend, including the cloud, including now there's a hardware dimension to all this. So my guess is this is more middle innings, acknowledging we are up 16 of the past 17 years in NASDAQ.
But you just mentioned it, Oracle saw its largest one-day rally in more than 30 years after reporting stellar first quarter results earlier this week, gave back some of those gains after concerns popping up about growth mostly coming from, to your point, OpenAI. I do wonder what you think about that name right now, especially since some of this is because they're benefiting from the spillover in terms of capacity constraints from the hyperscalers themselves.
So I would somehow these two thoughts are going to be able to coexist. So stick with me. I think that I'm more cautious on Oracle and more optimistic in terms of the broader AI trade. And part of that reason is that what Larry did when they talked about a 2030 target, very specific numbers, 144 billion in cloud revenue. You know, in the years that I've been an analyst and investing, I've never heard a company put that kind of clarity on a target that far out. Usually we get like a quarter, sometimes a year kind of guidance. So you need to dial it back. The street needs to kind of put that into context. They really don't know what's going to happen that far out. Separately is that it is coming from OpenAI. I'm a big believer that OpenAI is going to do that, but there is a risk that there's customer concentration risk. So from my perspective, the Oracle news was really important because it reminds us how early. A few months ago, I suggested we're in the third inning of this. I now think we're after the last earnings cycle in June or August, I thought we were in the second inning. And now I'm debating if we're even in the first inning. And that may seem like out of touch from reality, but what we saw from Oracle, just in terms of that endorsement from Larry about where the future is going, I mean, that's effectively what it was. I think it really just, it caused me to step up and understand better that this CapEx spend is going to last for years longer.
Okay.
All right, I hope you're all doing well today. We have multiple pieces of NVIDIA news to cover. First, Bloomberg reported overnight that NVIDIA's Jensen Huang and OpenAI's Sam Altman will announce new multi-billion-dollar data center investments in the UK while visiting the country with the president next week. The report claims that NVIDIA and OpenAI are teaming up with Scale on this project. As I mentioned earlier this week, with Jensen spending time with the president next week, I wonder if we will get any updates soon on the United States allowing a new Blackwell chip into China. Chinese regulators have recently been pushing back on the H20 even as there is still strong demand for NVIDIA chips from multiple large Chinese tech firms. I do wonder if China's opposition to the H20 is an attempt to get the United States to allow a better chip to be sold into China. I don't know. Either way, I view any China revenue as additional upside to what is already a solid long-term setup. And based on NVIDIA's Q3 guidance, their business is accelerating even without any H20 sales to China. And that is what we need to keep in mind. Business is accelerating and the long-term thesis remains intact regardless of what happens with the China situation. Also today, the information is reporting that NVIDIA is stepping away from their cloud efforts to compete with AWS. As I've said many times in the past, I am hesitant to believe anything the information reports having to do with NVIDIA rumors given their previous track record on that subject. But even if this story is true, I don't view this as a problem for NVIDIA. The report claims that NVIDIA is using most of their cloud capacity for their own internal use rather than offering it to external customers. I don't view this as a problem. It appears that NVIDIA may be focusing their cloud efforts more on NVIDIA's Lepton, which was announced earlier this year. Lepton routes workloads to cloud partners such as AWS and Microsoft Azure. And so if this story is correct, it would appear that NVIDIA is focusing on managing the flow of AI workloads through Lepton rather than trying to compete with the hyperscalers, and then using their own capacity for internal use at NVIDIA. All of that to say that I don't view this as anything to be concerned about. This week has been very interesting for AI infrastructure stocks after Oracle reported massive backlog numbers and very clear visibility in their revenue guidance. Oracle is essentially becoming another major hyperscaler, which is great news for NVIDIA. We also learned of the Microsoft Nebius deal this week. Both of these events tell us that there's very strong demand for AI right now. I'm not going to belabor this next point because I don't want to be redundant, but really quick, I want to once again say that I encourage you to research IRON and consider it from the perspective of a potential long-term investment over the next couple years or so. I'm not telling you to buy it. I'm just encouraging you to look into this company because I personally think there's a lot of potential upside over the next 1 to 2 years. And I think the Microsoft Nebius deal adds even more potential upside for this company in the future. Microsoft CEO said 6 months ago that Microsoft would be leasing a lot of capacity in the future, even out into 2027 and 2028. With this in mind, I would not be surprised if at some point over the next couple years IRON strikes a large deal with a major hyperscaler, similar to the Microsoft Nebius deal that was announced earlier this week. That is not the sole reason that I'm bullish on IRON, but it does provide potential additional upside to a setup that I was already very bullish on. Seriously, look into this company and consider it as a possible long-term investment. The long-term thesis surrounding NVIDIA and the build-out of AI data centers remains firmly intact, and it's even stronger after the news from Oracle, Microsoft, and Nebius this week. AI demand is extremely strong, and I do not think we are anywhere near a bubble-bursting type of event. I think this AI revolution is fundamentally different from the dot-com era in multiple key areas. First, the largest spenders in this AI revolution are extremely well-capitalized with the deepest corporate balance sheets on the planet. Second, the largest spenders are not aimlessly investing in AI infrastructure in the hopes of eventually finding use for it. Rather, they already have multiple uses for it. They're already seeing a direct ROI on their AI investments, and they're investing heavily as they try to meet extremely strong demand from their paying customers. Third, the largest spenders in this AI revolution are primarily funding their investments with their own cash flows. That was not the case during the dot-com era. And fourth, the development of new use cases and mass adoption of the technology are both going to happen much faster than they did during the early days of the internet, because the internet is already here. We don't have to wait 10 or 20 years for mass adoption to occur. Rather, it's already happening at this very moment, which drastically reduces the risk of long digestion periods like what we saw in the early days of the internet. For all of these reasons, I seriously do not think we are anywhere near a bubble-bursting type of event. This AI wave is fundamentally different from the dot-com era. Will there eventually be an overbuild of capacity? Perhaps at some point, but I think we are at least 3 to 5 years away from something like that happening, if it happens at all. New use cases continue to be developed, and I want you to realize that new use cases will increase the need for more compute. As I've been saying for a while now, I think we're going to see a surge in compute demand fueled by agentic AI being introduced to the general public, and I think this surge in demand will extend well into 2026. Jensen seems to agree with this idea, as he said on the earnings call that he thinks reasoning agentic AI will be a major growth driver in 2026. And looking beyond 2026, we have multiple major growth opportunities like AI robotics that will increase the need for compute even further. Since we're talking about future growth opportunities, I want to briefly remind you that we have sovereign AI, enterprise AI, which Jensen believes is an opportunity worth hundreds of billions of dollars, many AI native startups, AI robotics, and quantum. NVIDIA is involved in all of these areas, and they're really just starting to capitalize on some of these major growth opportunities. Sovereign and enterprise AI are really starting to pick up steam. There are many new AI native startups that will drive even more demand for NVIDIA's products, and NVIDIA is currently establishing themselves as the underlying foundation of both physical AI and quantum computing. Jensen told us earlier this year that NVIDIA is already working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform. And there are already over 2 million developers building on the NVIDIA robotics stack. We also have NVIDIA AGX, which allows real-time on-device inference, meaning robots will be able to have intelligent interactions with the real world even when they're not connected to a data center. As I've explained in previous videos, I seriously think physical AI could eventually be a larger revenue source for NVIDIA than their current data center business. This is a massive growth opportunity that does not get enough attention. I think that many of these growth opportunities are being largely underestimated by most analysts. And therefore, I think that NVIDIA's long-term growth is still being largely underestimated. And I think this company still has a lot of runway ahead of it. Blackwell Ultra is ramping very quickly right now. Rubin is on track to launch in 2026. We also have Rubin CPX expected at the end of 2026. Then we have Rubin Ultra in 2027 and Feynman later on in 2028. We have a clear data center product roadmap extending into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. This tells us that Jensen expects growing AI demand and an expanding total addressable market underpinning all of this. The long-term thesis remains intact, and I honestly think that NVIDIA will be worth substantially more in future years than it it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.